As a new trader, it's very easy to get confused and overwhelmed with all the different trading videos on YouTube. The truth is, to become a profitable trader, you don't need a 4-hour course explaining price action. After trading for 7 years, I've studied all the price action concepts that you can think of, and in today's video, I'm going to explain the most important price action concepts that help me become profitable. And then I'll show you real trading examples using these concepts, so by the end of the video, you can have actionable steps that you can use to make profits. So the number one price action concept that will help you become profitable is always waiting for candlesticks to close. Now, I've talked about this concept in previous videos. However, I've gotten a lot of questions on exactly why we should wait for candlesticks to close and how it can increase our win rate. So in today's video, I'm going to explain exactly why we should wait for candlesticks to close, and then I'll show you some real examples of trades that we didn't wait for candlesticks to close and trades we did wait for candlesticks to close and how it impacts our profitability. So the very first thing we have to understand is, how does a candlestick actually form? To understand why we need to wait for a candlestick to close, we need to understand the candlestick at its most basic form. So on the left side here, we have a bullish candle, and on the right side, we have a bearish candle. In this bullish scenario, we have the open of the candlestick at the bottom of the green body. So this right here would be considered the body, and these two lines that we can see here, these are the wicks of the candlestick. Now, this body is important because this is where the most volume was within the candle. However, these wicks also tell us a story, and we're going to talk about exactly how you'll be able to interpret that. Now, for a bullish candle, we open at the bottom of the green candle, and when we come down to the low here, this is going to be the low of the candle. This means that the stock actually moved from open to the downside first before reversing to the upside. This is important to understand because it's giving you a little bit more of a story on exactly what happened with price action on this candle. Now, from the low of this candle, we moved all the way back up to the highs of the candle, and the candle ended up closing at this level right here. Now, what does this signify to us? Well, this tells us that buyers were more aggressive than sellers on this candle. This also tells us that on this wick right here, we have more selling orders, but on the bottom wick right here, we have more buyers that stepped up. Therefore, just from one simple candle, we are able to interpret and find multiple price action concepts being played, and this gives us enough information to actually look for a potential entry. Now, when we look at the bearish side, it is the exact opposite of the bullish side. We open up at the top of the body candle, so the body is right here. We open up at the top. We move from the open to the high. This shows that buyers were trying to step in. However, sellers were too strong, and we moved all the way down to the low of the candle, and we ended up closing the candlestick where the body closed right here. So this is the exact opposite of the bullish candle. Here we have sellers that are more in control than buyers. And once again, what does this candlestick tell us? It tells us that buyers stepped in near the bottom of the candlestick. However, there was strong and aggressive selling at the top, and that's why we moved down from the open to the close of this candle. So now that we understand how candlesticks are formed, how does this actually help us? Well, based off of that candlestick information I gave you, what does this chart tell you, and would you enter this trade? In the first part of this trade here, we can see that this was the 5-minute high retest. If you don't know the strategy or setup I trade, there's going to be a link in the description with the full playlist or full course for absolutely free on how to learn my full setup. However, this is the 5-minute high, and when we're coming back for this 5-minute retest, we simply want the stock to come into this level and move back to the upside as shown in this example. Now, of course, this looks really good, but what happens when the candle actually comes into this level? Now, as we can see, when we came into this 5-minute retest, and let's say you instantly bought without waiting for price action to confirm, you bought your entry right at that key level when it hit, and your stop loss was simply a break below the candle that actually broke above the 591 level. Well, unfortunately, you would have entered the trade and stopped out in the very same candle if you weren't waiting for any price action confirmations and buying blindly just off of the break and retest itself. However, if you waited for that candlestick to develop and fully close, you would have realized that this is a trade you would have wanted to get in on. This came back into our 5-minute retest, and it actually showed a lower wick. What does this tell us? Well, this tells us, like I just explained, that buyers were overpowering sellers, and therefore this is a key area that buyers wanted the stock to hold. Therefore, we could have entered in on this trade after the candlestick closed, and we could have targeted this high right here where we would have hit our profit target. But this trade would have only worked if we waited for the candlestick to close. If we didn't wait for the candlestick to close and entered in blindly off the level, we would have gone stopped out and never captured this move to high of day. So the only reason you would have lost or missed that previous retest because it never actually had a drawdown after the candlestick closed is because you didn't wait for the candlestick to close. Even with our formation example, you have to understand at one point when this candlestick was still forming, though we know it is bullish because the candlestick is actually closed at this point, at one point from open to low, this was actually a red bearish candle where sellers were overpowering buyers. But once we waited for the candlestick to close, this body turned into a wick and then moved all the way back up to the highs and closed as a bullish candle. So now that we understand how candlesticks form and why it's important to actually wait for candlestick closures, how will you be able to increase your win rate and not stop out of unnecessary losses? Well, let me show you a couple examples why it's crucial to wait for candlestick closures, and then by the end of the video, you'll actually have actionable steps that you can put into your own trading plan to actually become profitable. All right, before we get into the examples, I want to make sure you understand exactly why and how we should wait for candlestick closures. So in this example here, we can actually see this is the 5-minute retest. So we have 1, 2, 3, 4, 5. We can mark out the 5-minute high right here. Now, as we can see, when we came back for the retest, this was a very strong price action candle. Therefore, we would have taken our entry on this level right here. Our profit target would be at least high of day, and our stop loss would be the break of the lower wick of this candle. Now, as we can see, we have a candlestick currently forming. This candlestick has not closed yet. However, it is nearing our stop loss. It actually broke our stop loss. Therefore, for most new traders, this is where they would exit the trade. However, because they did not wait for this candlestick to actually finish forming, it actually ends up closing above our stop loss. And what can you see? Well, this is actually a bullish candle. Why? Though it opened up here, we had to move all the way down to this previous stop loss low and also our entry point, but we have this very strong wick. What does that imply to us? This implies that buyers are stronger than sellers, and we move the stock back above our entry, meaning that they are trying to hold us above. So for us, if we waited for that candlestick closure, we would still be in this trade rather than being used as fake out liquidity. And from this candle, we can see the very next candle actually moved to high of day and hit our profit target, but we were only able to capture this move because we waited for that candlestick to close. Now, it's very important to mention, the reason I'm talking about candlestick closures is because when you back tested your strategy, most likely you were actually waiting for candlestick closures rather than getting stopped out on simple wicks. So not waiting for candlestick closures when you're actually trading in real time is only diminishing your edge in the markets, and it's actually making you less profitable. Another reason you should wait for candlestick closures is because of simple liquidity sweeps like this. And finally, you wait for candlestick closures to actually give you the full picture of the trade rather than prematurely getting stopped out. Now, does that mean you have to have a manual stop loss? Yes. I personally use a manual stop loss myself as well. However, let's go into the actual examples with some real charts so this can make more sense. All right, so for the first example here, we're on QQQ, and the only levels I'm going to mark out is going to be the pre-market low, the 5-minute low, pre-market high, and the 5-minute high. So those are the only levels I'm going to mark out. There are only going to be 4 levels going into the day. Once again, if you don't understand the strategy or setup that I'm taking, I have a full in-depth video on my channel that you can watch after this video. However, what we would like to see is a break above any of these levels. May it be the 5-minute high or the 5-minute low or pre-market low, a break above, a retest into this previous level, and then to move up to high of day or low of day. So let's play out this trade and see exactly what happens. So in this example here, you can actually see when the candlestick was coming below this level, we actually created a full bearish candle down, and then we came back with this very strong wick on both of these candles, showing that buyers are stepping up. We never actually broke below this pre-market low. This pre-market low held the entire time. Now, if you were a breakout trader looking to go short on this name, you would have instantly gotten faked out all the way back up to high of day. Along with this, even with our setup, which is the break and retest, we wouldn't have even considered this a potential retest. Why? Because the candle never closed below this level. Therefore, we were never looking for that short position because, like I said, the candlestick closure has to be below or above whichever level we're talking about. In this example, we broke the 5-minute low. However, we never broke below the pre-market low, and therefore we came all the way back to the upside, and we avoided this loss or even a potential entry by simply waiting for that candlestick closure. So now that we're moving back up to high of day and we actually do have a candlestick closure above this 5-minute high, we can actually look for a potential retest because we closed above the 5-minute high, showing that buyers are indeed stepping up. So once again, on this candle right here, the exact same thing just happened. We came below the 5-minute range retest low. However, we closed the candlestick above. And what does this candlestick tell us based off of price action? Well, it tells us that this previous candlestick closed at the low of the previous body. We opened up this candlestick right beside, and we made a big move down and sellers were in control. However, as we came down, buyers wanted to defend this 5-minute range high, and therefore they brought it all the way back above this level. But not only did they bring it above this level, they actually closed it at a new high of the candle or above the opening price with the body, meaning the most volume was placed right up here. Therefore, for us, we understand that down here we never got a candlestick closure. We did get a candlestick closure above for high of day. We got some nice displacement and now a retest. Therefore, we can actually enter into a long position here. Our stop loss is simply going to be the break of the low of this candlestick, and our profit target in this scenario can simply be the pre-market high level. Now, this gives us a 2.35 risk to reward trade. Let's enter into a long position here and see exactly what happens. Another thing I want to mention right here that would have helped us stay in this trade, when we came down to the low or our stop loss, we never had a candlestick closure below our level. The body still closed above this previous candle that we entered on. Therefore, we would still be in this trade. It came very close to our stop loss. It actually wicked below our stop loss. However, we got a very impulsive move right from that level. Therefore, because we waited for the candlestick to close, we would still be in this trade looking for our profit target, and we did not get stopped out. And just like that, we ended up hitting our profit target in this example, which was the pre-market high. And the only reason we were able to hit that profit target was because we waited for candlestick closures, not only at pre-market low, not only for high of day, but also for our entry and our stop loss. Now, some of you may have the question that if you wait for a candlestick closure, sometimes your loss may be a little bit bigger than it would have been if you simply stopped out of the trade. And yes, that is correct. However, based off my personal performance and historical data, I notice that if I wait for candlestick closures, that actually gives me a better result than stopping out of the trade every single time it even comes down to my level or wicks below. Because even in this example right here, yes, you could have re-entered using the 84% rule, which is a video I made last week. However, by simply waiting for the candlestick closure, as long as you have a 2R multiple per trade at a minimum, you will still see profitability and you will see your win rate increase. Now, to really solidify how we should wait for candlestick closures, let's go look at one final example. All right, so here we are on our second example. In this example, we're going to mark out the 5-minute high and we're going to mark out the 5-minute low. Now, once again, all we're waiting for is a breakout and then a retest of any of these levels. So let's play out the trade and see exactly what happens. So right off the bat, we actually got the breakout of the first 5-minute range retest. We moved to the upside. Now what we would be looking for is simply this retest for a move back up to high of day. Now it's very important to mention when we come back into this retest level, we need strong price action. We need buyers to step up and we need that candlestick closure to be bullish. So let's see exactly what happens when we do come back into this level. Now, in this example here, if you did not wait for this candlestick to close, but rather the way you trade is simply by letting it touch the level and you enter the trade no matter what, that's not the right way to trade because you were not able to gauge the proper price action. In this example, we can see that we actually ended up breaking below the level, and because of this, with no strong price action, this is not a trade I would take, and I would simply avoid this loss or this entry by waiting for price action confirmation, by waiting for the candlestick to close. So I hope by this point of the video, you can actually see why waiting for candlestick closures is so important. However, let's keep playing out this trade to see if we can still get a potential entry. So another thing to notice here, we are actually breaking below the 5-minute low now. So we came above the 5-minute high, broke below, no strong price action. However, now that we're below the 5-minute low, we could look for this retest, but we need weak price action. We need the candlestick to close weak at this level, and that is the only way we would enter this trade. So let's see exactly what happens when we do get back into this retest level. Okay, so right here, what happened? Well, so far when we came into the level, the first time we came in to touch it, we created an upper wick, though this candle did close bullish. However, when it actually touched the level, sellers were more strong. Now, the second time we came in to touch this level on the 1-minute candle, we still closed below the level. Yes, it is a green candle, but we still closed below the level. And finally, this third time, this candle is indicating to me that we are closing below this bullish candle body from the open, and therefore sellers are actually stepping in. Therefore, based off of this price action, I can enter into a short position here. Where would our stop loss be? Well, our stop loss would most likely be a candle closure above the candle that broke below the 5-minute low. So most of the times, my stop loss is whichever candle was the impulsive candle that broke above or below the 5-minute low. In this example below, that is going to be my stop loss area. And for my profit target here, we can simply target out this pre-market low. Now, this gives us a 2.29 risk to reward trade, meaning for every $100 of risk, we would make at least $229. Let's enter into a short position here and see exactly what happens. As we can see, we actually came back into our level. However, we did not have a candlestick closure above the level. As we can see, we actually hit our profit target down here, but if we kept playing out this trade, I just wanted to show you guys that we ended up actually coming back for the retest. However, no candlestick closure above our entry. We wicked above our entry multiple times, one time on our entry, second time here, third time here. However, we never actually ended up closing a candle even above our entry level. Therefore, we would have remained in this trade the whole time. And by simply waiting for candlesticks to close, even in this example here, we can see that if you're a new trader and you got that low of day move, you most likely would have stopped yourself out break even. However, even if you moved your stop loss, which I don't recommend, I have a video on that as well. If you waited for that candlestick to close, you still would have caught this whole move to the downside. So like I said, waiting for candlestick closures is one of the most important price action concepts that you can learn as a trader. Once again, if you want to learn a little bit more about my system and exactly how I trade, I made a full course on price action, candlestick strategy, and everything you really need to become a profitable trader. It's an absolutely free playlist to watch in the link in the description. But if you enjoyed this video, make sure to leave it a like. If you have any questions, put them in the comments down below. Make sure to subscribe to the channel and follow me on Instagram and Twitter, and I'll catch you guys next week with a brand new video.